Welcome back to the deep dive. So today we're tackling probably the big question in tech right now,
The
right?
elephant in the room, yeah.
Exactly. Has the whole, ChatGPT explosion, all these large language models, have they basically put Alphabet, Google's parent company, in real danger, financially speaking?
Well, that's certainly the narrative, isn't it? It's become almost gospel, especially among market skeptics. And the fear is pretty straightforward. Google makes almost all its money from ads tied to search.
A cash cow.
The absolute cash cow. It funds everything else. So the worry is, if people start chatting with bots instead of searching, well, that ad money could just dry up.
Which leads to this phrase we keep hearing, existential threat.
Precisely.
And okay, look, on the surface, it makes sense. If you change how people find information online, fundamentally, then Google's core business model seems broken. But, we've dug into the sources here, and the reality, it's rarely that simple, is it?
It really isn't. That's exactly what we want to unpack today. Let's try and get past that simple kind of bearish story. We want to show you the deeper layers here, the defense that Alphabet has actually built.
Okay.
We're thinking about it in three parts. First, their financial strength, which is, frankly, almost like a fortress. Second, some really clever strategic partnerships. Kind of a hedge, actually. And third, how fast they're evolving their own products to keep people using Google.
All right, sounds like a plan. Let's start with the money then. The financial fortress. I mean, if this LLM threat is so immediate, so existential, shouldn't we be seeing it, like right now, in the actual Google search revenue numbers? Shouldn't they be taking a massive hit?
You'd think so, wouldn't you? And that's the first major challenge to the whole panic narrative. The facts, well, the data we have.
Yeah.
It just doesn't seem to align with that level of fear. Not yet, anyway.
Okay. So what does the data say? We've got a full year's worth.
Right, we do.
Yeah.
Covering the period when LLMs really blew up. And the results for Google search revenue are, well, surprisingly strong.
Okay, lay it on us. What are the numbers?
All right. So Google search revenue. Q3 2024, that was about $49.4 billion.
Okay.
Q4, usually a bit higher with holidays, jumped to $54.0 billion.
Right.
Then Q1 2025, $50.7 billion. And Q2 2025, $54.2 billion.
So big numbers, obviously. But what about the trend, the growth?
That's the crucial part. If you look at the year-over-year growth for each of those quarters.
Compared to the previous year.
Exactly. We're seeing growth consistently in the range of 10% to 12%.
Hold on, 10 to 12% growth.
Yeah.
During the period when this supposedly existential threat was taking off, that doesn't sound like a company in crisis.
It really doesn't. You'd expect flat numbers, maybe even declines, if the core business was truly under siege right now.
So what does that tell us then?
Well, maybe two things. One, perhaps the real impact, if any, is still coming. It might be delayed.
Okay, possible.
But two, and I think this is more significant right now, advertisers still clearly see Google search as incredibly effective. Like the best place to capture someone who's ready to buy something.
The commercial intent leader.
Exactly. So the financial data shows very little evidence currently that LLMs are making a serious dent in Google's dominance.
Okay, but let me play devil's advocate here for a second.
Go for it.
Isn't 10, 12% growth kind of expected? Like the baseline for a company like Alphabet just to keep Wall Street happy.
That's a fair point.
So what happens if or when that growth does slow down, or if they do start losing a bit of share?
Okay. Now we move beyond just the revenue number itself. We need to talk about profitability, margins.
Right, because Google search isn't just big, it's incredibly profitable.
Exceptionally profitable.
Yeah.
The margins are just astronomical.
Why is that? Remind us why it's such a money spinner.
Well, think about it. Once they've built the search engine, the index, all that massive infrastructure.
Which costs a fortune up front, sure.
Right, but that's largely a sunk cost. After that, the cost of serving up one more search result to one more person is tiny, almost zero.
It scales incredibly well.
Incredibly well. It's a high volume, very low marginal cost operation. So our sources suggest a huge chunk of every ad dollar drops straight to profit.
And that high profitability, that acts as a buffer.
A massive buffer, a huge financial cushion. It means that even if their market share does slip a bit eventually,
They can handle
they can absorb that and much more easily than a lower margin business could. They have this enormous war chest, this cash flow, that lets them weather storms and aggressively reinvest in whatever comes next.
Okay, so that's layer one of the defense. Financial strength, high margins acting as armor plating.
Exactly. They can afford to compete, even if it gets messy.
Which brings us to the second point, that reinvestment and a really interesting strategic move.
The hedge, you called it, the counterintuitive part.
Yeah. Where Alphabet is actually making money from the competition. It sounds weird, but it's happening.
Oh, how did that work?
It centers on Google Cloud Platform, GCP, their cloud computing division, competing with Amazon's AWS and Microsoft's Azure.
Cloud infrastructure.
It's
But within GCP, they have something special, particularly for AI workloads, custom-designed hardware.
the TPUs, tensor processing units.
Exactly. We hear specialized chips, but you have to grasp the strategic importance.
Tell us, why are they so important?
Well, while almost everyone else, including Microsoft for its OpenAI partnership, relies heavily on buying high-end GPUs from companies like NVIDIA.
Which are expensive and sometimes hard to get.
Very. Google went a different route. They designed their own silicon, TPUs, specifically optimized for the kind of massive calculations needed to train and run large language models.
Like their own Gemini model.
Precisely.
Yeah.
But it gives them huge advantages in cost, performance, and crucially, just getting access to enough computing power. They control their own supply, essentially.
So they built the perfect engine, the perfect rocket fuel, as you said, for the AI race.
They did. And now, here's the strategic masterstroke,
Mm-hmm.
or maybe just irony.
Okay.
OpenAI, the company behind ChatGPT, the very company seen as the biggest threat. They signed up to be a major customer of Google Cloud, using those TPUs.
Wait, seriously. OpenAI is paying Google Cloud
Uh-huh.
to use Google's custom AI chips to power ChatGPT, the thing that's supposed to kill Google search.
That's exactly what the sources indicate. It's the strategic hedge in action.
Wow.
Google is basically selling the picks and shovels, very high-tech, high-margin picks and shovels, during the AI gold rush.
Regardless of who finds the gold.
Exactly. So even if ChatGPT does pull users away from search, Alphabet makes money on the back end. They profit from the infrastructure powering their main competitor.
That completely reframes the competition, doesn't it? It's not just Google search versus ChatGPT anymore.
Not at all. It's Google Search versus ChatGPT and Google Cloud profiting from ChatGPT's usage. It gives Alphabet this incredible strategic control. They've made their supposed rival dependent on their proprietary tech.
Okay, so that's a powerful back-end defense. Financial muscle plus monetizing the competition's infrastructure. Now, let's pivot to the front end. How are they stopping users from actually wanting to leave Google search for these other chatbots? Protecting that core user habit.
Right. You have to defend the query box itself. And this is all about product evolution, integrating their own AI, Gemini, really tightly across everything they do.
So don't just wait for the threat. Incorporate the threat's capabilities directly.
Make it native. Make it seamless instead of making you go to a separate website, a different tab.
Which is friction.
Exactly. They're layering that conversational AI experience right into the Google search page people already use constantly.
This is the AI mode we're hearing about.
That seems to be the direction you toggle it on, and suddenly search isn't just 10 blue links. It's an LLM generating a synthesized answer for you right there.
So it goes from, here are some possibilities, you figure it out, to,
here's the distilled answer we generated based on all this information.
Yeah.
It's a fundamental shift in the user experience.
And doing it natively inside Google search, that must have big advantages.
Two huge ones, according to our analysis. First, as you said, it protects user habits. People are creatures of habit.
We type into that Google box dozens of times a day.
Right. If the cool new AI experience is right there where you already are, why would you bother switching to something else? It dramatically reduces the incentive to leave.
Makes sense. Keep them in the ecosystem. What's the second advantage? This must be about the money again.
It is. It addresses that core fear. How do you make money if people aren't clicking ads below links anymore?
Yeah, if AI mode just gives you the answer, where do the ads go?
Well, that's the challenge they're working on. Native integration allows them to reimagine advertising within the AI-generated answer.
How? Like sponsored paragraphs?
Potentially.
Yeah.
Or maybe sponsored citations within the summary.
Mm.
Think subtle, clearly marked placements that are part of the distilled answer rather than just separate blocks around it.
So if the AI summarizes how to fix a leaky faucet,
it might include a clearly labeled sponsored link or mention for a local plumber or a hardware store within that summary.
So they maintain the commercial connection, but in a new format.
They're trying to find that balance. Keep the ads effective, generate revenue, but without ruining the clean, synthesized answer experience users seem to want. It's about evolving the ad model alongside the product.
Okay, so if we pull this all together, the deep pockets and high margins,
The financial fortress.
the clever infrastructure, play with GCP and TPUs, making money off competitors.
A strategic hedge.
And now evolving the core product with Gemini and AI mode to keep users happy and keep the ad dollars flowing, just differently.
Right. Native integration.
It really paints a picture of a company that's not just playing defense.
No, they're actively repositioning its dual strategy, defend the core search business head-on with their own AI, while also profiting from the companies trying to disrupt them via the cloud infrastructure.
It's like they want to make money, whether you type a query into Google or send a prompt to ChatGPT.
That seems to be the goal.
Yeah.
Move from just being the front door to the internet to also being the indispensable engine room, powering the whole AI revolution.
So how is Wall Street reacting to this more nuanced picture? Are investors starting to see this broader strategy?
It seems like they are, yeah.
Yeah.
Slowly, perhaps. OpenAI gets a lot of the headlines, the buzz,
We're the cool new thing.
and some of those pure play AI startups get these massive
Yeah.
valuations. But Alphabet's own stock valuation has expanded. It suggests the market is beginning to appreciate the depth of their AI story. They're not just a search engine anymore. They're an AI company through and through.
But still, based on the sources, it sounds like maybe they're not getting the full AI premium compared to some others, trading at a discount.
That seems to be the case, yes. There's still some uncertainty, perhaps execution risk priced in, meaning the market is still figuring out the cost of this transition. How much traditional ad revenue might get cannibalized by the new AI mode, even if it's successful?
Right.
How perfectly can they tune that new advertising model? One source used a chess analogy. Alphabet has clearly moved past the initial stalemate caused by the LLM shock,
Okay.
but they haven't quite declared checkmate yet.
Mm.
That discount reflects that the game isn't fully won, the transition isn't fully complete and de-risked.
Got it. A good way to put it. Okay, so wrapping this up for you, the listener, the key takeaway is that this idea of an immediate existential threat to Google, it's probably too simplistic.
Much more nuanced. Their defense is serious, and it's multi-layered.
You've got the financial strength, the high profit margins providing that buffer.
Yet the armor plating?
You've got the strategic infrastructure layer, GCP, the custom TPUs making money even from competitors.
The hedge.
And you've got the product evolution Gemini, AI mode, integrating AI natively to keep users and find new ways to monetize.
Preserving the habit, evolving the ads. It's a pretty comprehensive strategy, actually.
Which leads us to our final provocative thought for you to consider.
Okay.
Given that Alphabet is in this unique spot making money, training AI for others via GCP, and deploying its own powerful AI for consumers,
Doing both sides.
could it be that their biggest long-term advantage isn't actually the consumer-facing search or AI assistant, but being the indispensable high-margin infrastructure provider for the entire global AI ecosystem?
Will the real power, the real long-term value, shift from the front door, the search bar, or the chat interface to the engine room, the cloud, the silicon?
Where the fundamental AI work gets done.
That's a really interesting question about where the center of gravity settles in this new AI era. Something definitely to mull over.
Indeed. We'll leave you with that thought until our next deep dive. Thanks for joining us.